Hi everyone, this is Vadim Poklopkin, your Flash analyst. Today is Friday, January 24th, and this is the weekly wrap. Today I wanted to talk about risk-reward. It's a critical concept for any investor or trader. How do I handle risk? How do I handle reward? There's a general rule of thumb that a lot of people follow where they want the reward to be 3 times the risk. In other words, if they are risking $1, they want to make 3. And that's a good rule of thumb to follow. But of course, handling risk and reward is a very individual thing. It's an emotional topic for a lot of traders and investors. So today I was going to show you how we here at the Flash Services approach both the risk and the reward. The market I want to highlight today is an ETF from our recent alerts for ETF Flash subscribers. The ticker symbol for this ETF is ARKG. It stands for ARK Genomic Revolution ETF. It's one of the markets from Cathie Wood's universe. And it's not a newcomer to the ETF Flash subscribers. We've had multiple alerts for this market over the past few months, mainly because, as you can see, since last April, it's been going sideways. And these swings have been repeating over and over again in the range between $22 and $27 over and over again. And of course, every trending market eventually breaks out of its trading range, and so will ARKG at some point, and that point may be now, but it has served us well to pay attention to the limits of these swings in the previous flash alerts. And the latest one we issued on January 13th at 10:45 a.m. Eastern, when ARKG was trading at 24.21. We said that EWAVES is placing ARKG in the process of building a 1-2-1-2 of a larger wave C. You can see on the chart here there's a wave B low at 22.27 on November 19th. And since then we have waves 1 and 2 complete to the upside, and then a smaller series of waves 1 and 2 of the larger wave C. We also said on January 13th that looking back at the price history, it's clear that the $27, $28 range has kept many advances already, so ARKG has some work cut out for it to break above that ceiling, which is right in this area. And as of today, this ETF is trading in the $27, $60, $70 range, so it is bumping up against this invisible ceiling that has kept its advances before. Now, switching over to the live view inside eWaves Live, and by the way, if you're new to our Flash services, eWaves is the engine behind our Flash alerts. It's the proprietary software that labels price charts with Elliott Wave labels, highlighting potential opportunities for us. And using the data through January 23rd, this is yesterday's close, eWaves continues to place this ETF in the beginning of that wave 3 of 3 of 3 of 3 advance. And this is where the question of quote-unquote reward begins to come in. We opened the alert at 24.21. The last price we're showing here is 27.59. That's a sizable move. So what is the safest course of action here? To close the alert or to let the market continue potentially out of its trading range? And the philosophy that we try to stick to here at the Flash Services is to let the market tell us how far it wants to go, instead of deciding for the market that the move is over. And with that in mind, what we do here at the Flash Services is adjust cancel alert levels as the market progresses in the expected direction. So initially, when we opened the alert on January 13th at 24.21, the question of risk came up. eWaves was counting this rally off this latest wave 2 as a wave 1. Under the rules of Elliott, we know that a second wave retracement cannot go more than 100% of wave 1. So if this was the origin of this latest wave 1 rally, then this would be the level of risk. This is the December 31st low of 2340. So we suggested placing the cancel alert level at 2330. So we knew that if this decline were to continue and take out this low, then this wave pattern would be negated, and maybe ARKG was now moving back to the low level of its trading range, and this attempt at the rally had failed again. But it didn't. This ETF continued higher, and on January 21st, we sent the subscribers an alert to adjust the cancel alert level to 2450. And then the next day, January 22nd, we adjusted the cancel alert level to 2604. And today, we raised the cancel alert level to 2735, which is right in this area right here. Our thinking is, if this market really wants to go higher and break out above this trading range, then it'll just continue moving higher. But if it decides to reverse again back down to the low $20 range, then raising the cancel alert level as close as possible to the current price takes out the worries, takes care both of the risk and of the reward. Now, of course, not every alert works out this way. Often the market does not want to go in the expected direction, in which case the original cancel alert level serves as that trigger point for us to close the alert automatically. And we apply the same approach to the alerts inside our futures flash as well as our stocks flash. Here's, for example, an alert for COO, the Cooper companies. We originally opened the alert on December 20th when COO was trading at 93.02. It is currently trading at 97.86, and we have adjusted the cancel alert level twice since then. If the market wants to prove itself to the upside, we're going to let it go as high as it wants to go, but we'll also continue to adjust the cancel alert levels to make sure that it doesn't reverse against us. So that's it. This is how we try to approach risk and reward in our flash services. Hope it gives you some ideas. And by the way, if you are interested in getting EWAVES for yourself, there's a way to license this software. You can go to ewaves.com, where you can watch a couple of videos that explain how the software works. And there's also a way to license EWAVES for yourself. And if you've got some friends who are not Flash subscribers yet, send them to elliottwave.com, have them click on subscriptions, and then choose Flash Services Opportunity Alerts. Thanks for watching. Have a great weekend. I'll talk to you again next week.